right, this week, the Quiet Bull universe delivered a very clear message. The market is still rewarding growth, but leadership is broadening. Volatility is increasing. And company-specific catalysts are becoming more important than simply owning the index, like a major index. The major averages finished the week under pressure despite Friday's rebound. Rising oil prices, elevated treasury yields, and renewed inflation concerns interrupt the market's recent advance. So beneath the indexes, several powerful moves were unfolding this past week. And nowhere was that more obvious than with biotechnology. Moderna surged approximately 177% in a day after its personalized cancer vaccine developed with Merck and combined with Keytruda produced positive phase 3 results in melanoma. The clinical results created the revaluation, but with approximately 13.5% of Moderna's public float sold short before the announcement, short covering added substantial fuel. And this is precisely what the Quiet Bull revaluation engine is designed to identify: a company capable of becoming significantly more valuable, and the event that forces the market to recognize it. Moderna's breakthrough did more than revalue one company. It validated mRNA technology in oncology. It highlighted Big Pharma's growing need for external innovation, and it ignited a broader biotech rally. The XBI gained nearly 6% on Wednesday and is now up approximately 39% in 2026. The chart suggests this is no longer merely an isolated bounce, so biotech appears to be moving through a larger cyclical rotation, with capital returning to a sector that spent several years under pressure post-COVID. That doesn't mean every biotech company is going to succeed, so I wouldn't just run out and buy whoever, whatever. But it does mean the market is becoming more willing to reward clinical progress, platform value, commercialization, partnerships, and acquisition potential. That's important. And within the Quiet Bull universe, IOVA continued advancing toward the $10 area, and the stock has already appreciated substantially from its lows, but the next test is whether it can establish sustained support near $9 and then challenge the $10 to $12 range. NTLA also participated in the biotech strength with its clinical hold resolved and its HAE program moving forward. The market can return its attention to the underlying value of the company's in vivo gene editing platform. Novavax, ticker NVAX, remains another name to closely watch. Its improving financial structure, Sanofi partnership, Matrix M platform, and significant short interest create the ingredients for a much larger revaluation. But the chart still needs confirmation. We're not there yet. What connects them is the possibility that one meaningful development could materially change how the market values the entire business. Outside of biotech, the artificial intelligence infrastructure cycle remains firmly intact, no question. Lumentum recently reported revenue of approximately $1 billion, more than double the prior year period as demand for optical networking accelerated. Strength across semis, memory, storage, networking, electrical equipment, and power infrastructure, I blurred them all together, continues to show that the AI investment cycle extends well beyond NVIDIA. But many of the strongest technology charts are also becoming extended. It doesn't automatically make them sells. It means discipline matters. So we'd rather wait for favorable entries than to chase strength after the easiest portion of a move has already occurred. Elsewhere, flipping the script on y'all, gold was one of the week's clearest leaders, gaining more than 5% as the dollar weakened and investors responded to rising government debt and fiscal concerns, which will always be there. The gold chart remains constructive, but as always, the best opportunities tend to appear when enthusiasm is low, not after everyone has recognized the trade. Energy strengthened as oil moved higher, but the longer-term setup is less attractive. Several energy charts appear mature, and seasonal weakness could, and that's where I want to focus, seasonal weakness could eventually provide better opportunities later this year, I think December. So what is the broader market's message from this week's Quiet Bull universe? First, the bull market remains intact, but is no longer moving in a straight line. Second, leadership is broadening beyond mega cap tech. Third, biotechnology has become one of the market's most important emerging themes. It's emerging. And fourth, catalysts matter. The market does not revalue a company because the story sounds interesting. It revalues a company when new evidence changes its future earnings, strategic importance, and probability of success. And our objective remains simple: find companies capable of 2 to 5 times more valuable, of becoming 2 to 5 times more valuable, and identify the event that makes the market recognize it. We're not chasing every move. We're watching the signals before they become stories. And that is the Quiet Bull universe. As we say, intelligence, not noise. And have a great weekend. Thank you.